Man, it is time to sell all of our gold and buy all of the Bitcoin. At least that's what I heard. So, wow, Bitcoin is above $60,000 again. And I'm told that I should have been in on that rather than gold all along. That must be a complete moron. And like everything, there's probably a little bit more to this one. So let's just dive in. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So the markets are crazy right now. That seems to be the consensus, and I'm not opposed to a crazy market personally, but what if they're wrong? Well, profit is profit. I don't even have to like a particular investment to be interested in it. I don't have any special interest in Eli Lilly or Nvidia. I can just like what they're doing. I don't even have to subscribe to a single narrative. The point here is just that I'm not stuck on any one thing. Now, something important that I thought was clear already is that gold operates as a portfolio hedge for me. It frees up some risk tolerance. It does not prevent me from investing or from buying real estate or making a wild bet on internet fund money. It actually allows it. Having that backup plan gives you the option. And I think that that's a good place to start here. Normally when you hear portfolio hedge or you hear 5 to 10% of your portfolio being in gold, that advice means you literally have safe haven assets in your portfolio. Use that to counterbalance riskier investments. So maybe it's a mix of gold and related ETFs. Whatever the case, it's meant to balance a portfolio. Now, I made the decision to go with physical metal because it has other benefits, but still does the same thing. So it gives me a fallback if something else was to go off the rails. An investment, business, health, any of it. So why is any of this coming up? Well, the markets are all trading at record highs. Crypto woke back up. So the comments about gold being a non-yielding asset, well, they're back. And again, that's always been a bit of the point. I'd probably throw an asterisk on that non-yielding part because it's hard to ignore the appreciation of gold. But like I said, gold is a fallback. Savings allow investments. Safety allows risk. Now, if I could put out a little bit of advice, because it's not going to be about how to pick stocks here, how to trade, it would just be to keep an open mind. Now, I got some bets into Nvidia, into Eli Lilly at a time when people said the market had nowhere left to go. Crash was inbound and was near. I also got in some Bitcoin purchases further back when people in the circle here said silver was where it was at. Silver was going to the moon. Now, I can give you plenty of bad decisions that I've made too, but let's hold on to those because either way makes the point. I've made the bad decisions too, but what I'm trying to get at here is that sometimes your instincts are wrong. Now, maybe you've heard about the Costanza rule. I'm not even sure it's a rule, but hopefully a few of you at least get the reference. We're talking about a Seinfeld character here who has made so many bad decisions that one day he decides to do the exact opposite of what he thinks is right. And then all of a sudden, of course, everything starts to go his way. Now, if we turn that into a rule, it's not just doing the opposite of what you think is right. It's being open to other possibilities, being open to data that maybe contradicts what you feel is right. What's some of that data? Well, the CME FedWatch tool is a pretty good example of data that might go against what you think is right. The tool tells us only what traders think is going to happen, and that informs what probably will, not because it's right on any kind of social commentary or because it can tell the future, but simply because that signals what traders are thinking, and traders set the price. I mean, down in the comments section, we're always going to have people who inevitably tell us inflation will never be under control by July because it just doesn't feel right. Now, for me, using the FedWatch tool is using the Costanza rule. It isn't a story that lines up with something that I already think should be right. It's not an opinion that lines up with a narrative that I like. It's just a data point. So what's all this getting at? Well, I don't think any of this needs to be all or nothing. You can like 2 things. You can like 20 things. I don't think that one prevents the other. Now, personally, I like building up some gold for a lot of reasons, and I can't think of any of those reasons that would stop me from investing. It actually frees up some ability to do it because I now have a fallback. Now, if we're talking about capital, yeah, well, that's where the balance has to come in. Now, having some balance means that I'm not going all in on any one thing or another. So maybe I am a moron, but liking gold hasn't closed me off to everything else. Maybe I have slept through something else. I don't know, something you like Maybe I haven't. But this is really just housekeeping here. Part of it for all of us free thinkers, and then part of it for the trolls who just want to come by and say, you should have bought Bitcoin instead. Now, if it wasn't clear, I do have a fair amount of Bitcoin, and some of you are into it, some of you aren't. I get it. I'm not picking sides. I'm not even saying that you should pick a side. I just think keeping an open mind is important. Actively seeking out information that might run counter to what you think. Now, that doesn't mean seek out the crazy people bringing you conspiracies from their basement. It just means find those data points that aren't set up to give further proof to a certain narrative. So you're considering the possibility that maybe the end isn't near, or that the market won't crash, or that it is and it will. Those counterpoints help you put together a contingency plan that's going to work in either case, and really that should be the goal of all of this. And we're going to get some inflation data tomorrow, and there's a better than even chance that it's not going to line up with what you think is really going on. Now, you can ignore it, stick with your gut, or you can consider it as just more information, and information that really does directly impact the price of gold and silver, regardless of whether or not you feel like it's accurate. Now, other things, if you like the stock market right now, if you like Bitcoin, that's great. The wider picture includes a lot of things to me too. Now, some of us might feel like the markets really are running too hot, but they're still running hot. They're performing. For anyone who thinks the market should be this hot and they're just going to keep going up, well, there's information telling us the opposite there as well. So what have we been saying? Well, look for some balance, and we don't have to go all in on that Costanza rule. We don't have to do the exact opposite of what we think is right, but most of us have been wronged enough to know that there's more than one possibility. Now I just need to know what to do with all this Bitcoin. So let me know in the comments. All right, let's call it good there. That last part was a joke, but let us know if you're making any big bets on gold or silver, for or against, if you consider it a hedge or if it's your big thing. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.